This is the Daily Market Comment by Mario Sachigiriakos. I'm Christina Marujos and thank you for watching at XM.com. The kiwi dollar took off like a rocket on Wednesday after the Reserve Bank of New Zealand poured cold water on speculation for negative rates. While the bank maintained a cautious tone and even introduced a new lending program, it also highlighted the improvement in economic data and, most importantly, revised its interest rate projections much higher. This came as a shock for investors. Overnight index swaps now suggest just a 60% probability for a quarter-point rate cut by October next year. As for the kiwi, this is a colossal development. If negative rates are now off the table, the kiwi could shine against currencies of nations whose central banks will remain aggressive, like the euro and Swiss franc. The British pound was the star performer in an otherwise quiet session on Tuesday after the government's notorious internal markets bill suffered a crushing defeat in the House of Lords, diminishing the prospect of another round of Brexit drama. The trade talks will continue this week, and investors seem to be calculating that the latest lockdowns in the UK and most of the EU have paradoxically raised the chances of a Brexit agreement because neither side can afford to throw their economy into an even deeper recession. As for sterling, the broader outlook looks increasingly bright. The Pfizer vaccine news hit markets like an earthquake this week, and the aftershocks continue to reverberate through many assets. Crude oil continues its relentless rally, the exodus from tech stocks is in full swing, and sovereign bond yields are marching higher, keeping the broader stock market on a tight leash. Things are calmer in the FX spectrum, but when euphoria is the name of the game, it is fruitful to ask what can go wrong and challenge the rosy narrative. In this sense, perhaps the single greatest risk right now is central banks overreacting to the vaccine news by taking their foot off the accelerator. If the likes of the Fed start getting cold feet now that things look better, similar to the Reserve Bank of New Zealand today, markets could throw a tantrum. This was today's Daily Market Comment here at XM.com.